And welcome back to halftime with we have your ETF edge. We're seeing two big pushes in the industry this week, getting very different receptions. Let's jump right into it. Joining me now is independent ETF expert Dave Nadig. Dave, thanks for joining us.
Thanks for having me.
All right, let's start off first. Get back to those two big players diving into the active management arena. We got billionaire investor Ron Barron launching his own fund, and low-cost king Vanguard filing for a new fundamentals fund, but with some higher fees. So is this a trend in this space, and is this space getting a bit crowded? Right now, active and passive ETFs, they're about 50% of the market each, about 2,300 apiece.
Yeah, it's been really interesting. We've had a huge run into active management this year, although very little of it has been what we would call traditional active stock pickers. So to see a fund like Barron show up is actually something to note. Now, Barron has some of the most expensive mutual funds out there. Some of them are almost 2% a year. We don't really know what the fees are going to be on the ETF. We expect those are going to be lower, but it's really interesting to see one of the storied stock pickers, one of the only folks who's actually managed to beat the Qs over time, showing up in the ETF arena a little bit late to the party. At the same time, Vanguard's bringing their Wellington strategies, which certainly are not charging 1.5%, but they're going to be more expensive than the average ETF. I think this is recognizing the reality that investors are looking for things that are a little bit different than just buying the market. It's very much part of what we're seeing so far. 37% of the flows in the last month went into active products. This is definitely a trend.
All right, moving on the crypto front. After a series of product approvals, the SEC, it's now actually delaying decisions on President Trump's own Truth Social Tracker, XRP derivatives, and some other parts of the offerings that are out there. What's going on? What's your take on this?
Well, the regulatory environment has gotten cleaner with the passage of the Genius Act and much of the other things we're seeing at the SEC. And we do have things like ETH funds pulling in huge assets this year. We've had close to $30 billion in inflows into crypto ETFs so far this year. But the edge cases, whether it's staking in Ethereum, whether it's meme coins, the SEC is definitely pushing the pause button there a little bit. I suspect we'll see a lot of these products launch before the end of the year, but I think we're going to be in a little bit of a lull while the SEC figures out what they're really willing to allow the ETF industry to kind of get away with here. The biggest edge case we've seen so far has been Solana being staked. That's a Rex Osprey fund. That got kiboshed very quickly and then finally traded. I suspect we'll see the staked versions of Ethereum ETFs very soon, and then probably will open the window on some of these altcoins and meme coins down the road.
All right, Dave Nadig, ETF expert, thank you again. Good to see you.
Thanks for having me.